All right. Well, good afternoon, everyone. This is Scott Thompson, and we are here for our Stock Investing for Beginners webcast. I appreciate everybody taking some time out of their busy weekly schedule to be here with me today. Give a shout out to Eva and Sharon and Jay Richardson and Lawrence and Simone and Kevin and M. Jakins and Rojo and everybody else that's here today. Appreciate that. Also want to give a welcome to those of you that may be joining us from the New to Investing webcast series that ended last week. And so this is kind of that next step for you. So welcome to you. We've got a great group of people that are here in the chat, in addition to Ben Watson, who's our coach and support there in the chat, but just a great group of people watching this video live. If you have some questions, feel free to put those in there. Ben will answer those. And I usually go back and review the questions as well, and we'll maybe repost some of those questions in the YouTube comment section. So you have a lot of different support here to get answers to your questions. Our objective today is to take a look at, a new, maybe just different way of analyzing which sectors are the strongest, and then looking for some scans or doing a scan in those different sectors. Before we do that, we'll have to do some housekeeping of our current open positions, and we'll review some of the rules associated with the stock investing plan that we've created and gone over. We've spent the last 8 weeks going over the 8 lesson series. Want to show you where that is in just a moment. But before we get started, remind everybody that our presentation today is for educational and informational purposes only. None of the stocks we look at, nor the strategy that we review, are meant to be recommendations. We're using the Paper Money Thinkorswim platform. There are some significant differences with that platform compared to the real money trading. We talk about stop orders a lot, and so there's no guarantee that the execution of a stop order will be at or near the stop price. We talk a little bit about what's called fractional share trading or fractional share investing, and there's certain risks associated with that are unique, and they have some limitations, so be aware of those limitations before you invest in fractional shares. And also remember that all investing involves risk, including the loss of principal, and past performance is no guarantee of future success. So let's go ahead and jump right over to the our web page, the Trader Talk Schwab Coaching webcast page. If you scroll down on the home page, and I'll chat this in to the chat there so you have it. But if you scroll down, you'll see the 8 lessons that we just finished. So Stock Investing Basics is right here. And there's just 8 lessons in this particular watch list. If you want to get all of the webcasts that we've done, you can go over here to the playlist and then scroll down. We're just up here near the top, Stock Investing for Beginners. Click on View Full Playlist. And this will have all of the lessons. Here's lessons, 1 through 8 there. And let me copy this in as well so you have it there in the chat. Hey, Will and Gary, welcome. Alicia. So if you want to review those, you can. We're going to be talking about our stock investing plan, and that's going to be found here in lesson number 4. If you want all of the rules associated with that plan, but I'll review those as we go through our positions today. And so let's go ahead and jump over to our Thinkorswim platform. Give you some updates. We have 3 different trading plans that we've been doing. We've been investing every single day now for 295 days. We've invested $7.24 each trading day, which is equivalent to about $5 per day of the year, so $1,800 and change. But over the 295 days, we've invested about $2,135 into an ETF that tracks the S&P 500 and into an ETF that tracks the NASDAQ 100. And so we continue to do that. Many of you over the last couple of weeks have asked about, how do we, manage our positions? When do we take our profit? Do we have to use stop orders and things like that? Well, these first 2 strategies don't have a stop order. We're just investing consistently every day. Or we have another one where we're doing fractional shares of the top 10 holdings of those ETFs that track those major market indices. And we've invested $5 the first day of each week for now 61 weeks. And so there's about $305 that we've invested in each one of these top 10 holdings. And you can see our quantities over here. We have like 1 share of Apple, we have 1 share of Amazon and change. We don't quite have 1 share of AVGO or Berkshire Hathaway. We have almost half a share of Meta. But you can kind of see that we've had a couple strategies where we've introduced just getting started, just doing something consistently in the market. And so those two plans, investing daily in the ETF that tracks the big major markets, or investing weekly in the fractional shares of some select stocks, and you could choose your own stocks that you wanted to do that in. But we just really encourage people to be consistent and do something regularly in the market. Now, if you do want to be a little more active, we also introduced this plan called what we call the Two Green Arrow Plan. And the objective here is we're buying stocks in the S&P 100. We're buying uptrending stocks, meaning our moving average, which is the 50-period moving average, has to be trending up or at least higher today than it was yesterday. And as the trends change back and forth, sometimes you catch that just as it starts to tick up, and we might look at a couple examples of that today. But we're buying uptrending stocks with the intention of holding them until the trend is over, and we're using a stop below that 50-period moving average to help indicate when that trend may change. But we're also trying to give the stock the benefit of the doubt, meaning that if it does close below the 50-day moving average, we're not just saying, I'm just getting rid of it. What we're doing is now we're going to adjust our stop up to give the stock some wiggle room to move around, see if the trend will resume. And if it does, then we're still in the trade. If the stock continues to fall, it'll stop us out. And I went back and looked, just as kind of an update over the last year or so, we've done about 100 trades together in this webcast. We've been stopped out of really all but we got 15 open positions here, I think is the total right now. And out of all of those that have been stopped out, we actually have a net gain on those. I'm not going to report the total, but it is positive. And then, of course, on the open positions that we have, we're up about $1,267 right now that you can see. So this strategy has been profitable. I do want to disclose that it's not nearly as profitable as investing all of the money in the S&P or the NASDAQ would have been back on the 9th of June when we started this in 2025. But we are also under the intention that we didn't have 10,000 or 3,000 or 4,000 or 1,000 or even $50 necessarily to go all in at the beginning. So again, we're trying to do some things that are very consistent. And so what I wanted to start off with today is just looking at our first clue, and this above 50 SMA, this column header is actually in the description of our webcast. But really, this just tells us how many days the stock has been above the 50-period moving average. If it's red, then we know the stock is below the 50-period moving average, and we may need to adjust our stop. So I wanted to look at Ford, and I wanted to look at NTES today, just to review those and review the rules for how to adjust the stop here. So let me go over to the chart on Ford. And what I want to do is I want to go back a few days here so we can review the rule a bit and just see kind of what's happened. Now, we bought the stock over here about $13.15 when it gave our green arrow signal. The MACD over here, you can see, started rising again. The stock went up to $17.78. And all of us at this point, me included, wish we sold it right up there. But that wasn't part of the plan. The plan is basically we wait until we get red arrows. Do you guys see these little red arrows here? Let me change my my drawing tool to just arrow so you can see it. But we have some arrows that show up on the chart. And what we're talking about in this plan is if we have 2 red arrows, then that's a signal for us to do something. And so, we got a lot of red and green arrows chopping through here. The MACD was green, and then the stock was above the moving average. And we had this little, what looks like a bounce setup back here on the 31st of July. And so my question to you, those of you that have been here with us for a little bit, do we have an action item here? Now, focus on the right side, and we're just going to walk through a few days here as we talk about this action item that we need to do. So, all I have to do is look at the right side of my chart. If the stock's above the moving average, that's a green arrow, and I don't have anything to do basically. All right. The next day, the stock gives a red arrow. Do you guys see that? We have a red arrow. Now, what causes that red arrow to appear is the stock price closed below the 50-period moving average, which is this green moving average. And so my question would be is, do we have anything to do today? This is the 3rd of August. Now, usually the stock closing below the moving average, that's usually the two green or red arrow signal. But in this case, it's actually not. Do you guys see that? The MACD is still green. So right here, this particular red arrow is not the second green arrow, or second red arrow. We have to actually wait for that second red arrow to appear, which actually happened here. The MACD was the second one to go red, which is a little unusual. But here's our two red arrows. So this is our stop adjustment signal. It's not an exit signal. It's a signal for us to do something, and that something is to adjust our stop. And so if I put my cursor on this day, now look right up here at the top, you can see the L value. So if I put my cursor on that day, the 4th of August, you can see the L values at 1398. And so this is now a trigger for us to do something. Now, the rule that we teach in this two green arrow system is to put the stop 3% below the low price on that third or second red arrow day, trying to give the stock a chance to resume its trend. It did something similar back here. It gave some red arrows and then it went back above the moving average and it looked like it might start trending up again. And it did for a little while, making some short-term higher highs and higher lows, but basically still stalled out well below the previous big high that we had. And now the stock's falling back. It looks like not only did we go below the moving average, but we made a little bit lower low, or at least a similar low. And so that trend is very much short-term sideways right now. And so our rule at 3% below 1398 would put a stop. If I did my math right, I think it's at 1356. And so a couple of questions I wanted to talk about on Ford right now is, number one, when we get any stop, the general idea is for us to ask if that stop makes sense. Would it make sense to move our stop to 1356 based on the rule of putting the stop 3% below the low price? And so when we ask that question, what we're really asking is that below support? Is that stop below support? If we were to get stopped out at 1356, would we be thinking, oh, okay, yeah, that's a little bit of a change of the trend? And this one, in my opinion, we do have some old support and resistance there about 1380. So if someone wanted to move their stop to 1356, I think that makes sense. However, in this case, we also had a low there about 1322. And so as I look at this and I think to myself, Scott, do I want to be stopped out at 1356? And the answer is obviously no, I don't want to be stopped out of this at all. But if I got stopped out at 1356 and there's support at 1322, I would hate for it to go down to like 1320 or 1340, essentially knock me out of the trade, and then the trend resumes. So when I'm asking myself if I'm okay being stopped out or if that stop makes sense, those are the things that I'm considering. And so in this case, I think it would be perfectly acceptable to move the stop to 1356 because it's down below a support level. There is another support level very close to that at 1322. And so basically what I did is I have a stop sitting here at about, this is our current stop at 1295, which I think is 2% below this level. Basically saying, you know what, as long as it stays above 1322 and change this above my stop at 1295, I'm okay letting this stock bounce around a bit. If I got stopped out at 1295, I'm okay with that. Now, one other consideration, and this will come up occasionally when you're trading and investing, is you'll notice our purchase price is at 1315. And I would say honestly, for trying to buy an uptrending stock and hold it until the trend is over, this stock hasn't really performed all that well. And so another consideration, and this is actually new, so if you've been in my class for a while, you probably haven't heard me say this before, but in this case, I'm thinking, you know what? Ford really just hasn't performed like I would like to have seen it perform. And so if someone wanted to, they could say, you know what? I'm going to put my stop at my break even or my purchase price. And if I get knocked out, I'm going to either not have any loss except for my commissions if there were any, or we know how a stop works. It might gap over our stop and trigger an exit far below our stop. But that's another consideration. And frankly, these are all so close together that I think for our example here, we're just going to leave our stop at 1295, which is down below this current 1322 support. That'll ultimately be about 20 cents of risk per share that we currently have, provided we get stopped out near that price, which isn't guaranteed. But so this is, where we're sitting. And if we go out to where we are today, the stock looks like it came down and hit that 1380 support, bounced around there a little bit. Today, it looks like it closed right above that. And again, the trend's really not doing what we want it to do, but I'm also willing to maybe let this go, trying to let the stock trend. All right. So if you have some questions about that, feel free to chat those in. I see some chats and comments back and forth here in the chat. But if you have some questions, go ahead and post those there. Ben will answer them for you. So I'm not going to do anything on Ford here because our stop is so close to support as it is. We're just going to let it go. All right, now NTES was the other one that had the two red arrows. If we go back to the monitor page, you can see here this column, NTES. We bought the stock for about 122.75. It's a little bit profitable. We have about a 1% gain right now that we're sitting on. And this one has the red arrows. So NTES, we had a two red arrow signal over here. Our current stop is down here at 113.71. And we got two red arrows basically today. So what's the rule? Well, again, the rule says to put the stop 3% below the low price of that second red arrow day. We got a red arrow on the MACD yesterday. The stock was still above the moving average, so nothing to do there. But then we closed today. We gapped down, rallied off of the lows. That's why we have a green candle today. But we're still at a red arrow scenario. So the low price today is at 121.80. And if I did my math right, the 3% below that low is 118.14. So again, the question is does the stop, raising our stop to 118.14, does that make sense? And it looks like we have some pretty good support and resistance in that area, about 119.50. So that stop would be acceptable at 118.14. Our stop's below that at 113. So that would be reducing our risk by about $5 per share. Or, the other thing that we could consider doing is we could be a little more, give the stock a little more wiggle room by putting our stop 3% below 119.49. And so, one of the questions that comes up is why do people use 2 and 3% below support for their stops? Well, technical traders posit or suggest that a support level is not broken until it breaks by 2 or 3%. So that's why you hear that number around that level for a lot of reasons. So in this case, I'm going to put my stop 3% below 119.49. And let me see where, I think I've got a calculator over here. We'll switch gadgets to our calculator. And 119.49 times 0.97 will give us the number. So 115.90. So that's where we're going to move our stop up to. And this is really kind of easy to do. I can left click on my existing stop order and just drag that up. And then I'll try to get it near 115.90. I don't really care if I get it there exactly because I'm just going to edit the order. And I'm going to put the number I want right here, 115.90. If I could type. And we want to make sure it's good till cancel, hit confirm and send. We realize it's a stop order and it could get filled significantly lower than 115.90, especially if it were gapping over that, right? If it just trades down through that during the day, then we have a pretty good chance of getting filled near this price, but it probably will be lower than that. So anyway, we're going to adjust that stop up. Our current stop is lower than the rule says to put it. We're giving a stock a little bit more wiggle room. You can see the stock's actually gone down below the moving average a couple times recently, right? And so it's not really using that 50 period moving average as a support level. And so we want to identify some of those other levels. All right. So there's taking a look at our red arrow scenarios. Now, the other thing that I wanted to do on this page was just to point out, we've been investing up to about $500 is our initial position in all of these trades. We're pretending that we have a $10,000 account and we're risking or we're investing up to 5% of that account value in each of these stocks when we get a new buy signal. And if you look down the net liquidation, you can see that we actually have a few of these that are well above $500. And so why is that? Why does Met have a net liquidation of 1,000 versus like closer to 500, or Target versus 1,000 versus 500? And so the answer to that is that we've actually added to our position. And so, this is just why those are there. And MET, you can see if I click on my little sell box over here, these are our current stop orders on MET. And I had the original stop at $74. And then when we added to our position in June, the stop rule said to put it at 78.46. And at the time, I could have and probably should have moved my stop on the original 6 shares up to that 78.46 amount. I just didn't do it. So what I wanted to do with everybody today is to look at how to adjust a stop on an open position, maybe where we've added to it like we have in this case, and go over here to the chart and let's take a look at MET. So MET, you can see number one that I have two stop orders here, and I don't really want two stop orders. I want one stop order that closes out of everything here. And so, now I want to go back a few days here and just go through the rules again. So our rule is to buy a stock that has an uptrending moving average. Now I think this green line on our chart, if we look at the left side and then we look at the right side, we can see that that moving average is rising. That's the classic type of trend we want to see for these types of trades that we're doing. All right. Now, if we get a new buy signal, this is another stop adjustment rule. So, be aware of this rule as well. If we didn't already own the stock and we got a new buy signal with two green arrows, and now we're looking at the right side of the chart and my MACD's red, and I go forward a day and now it turns green, that's a new buy signal right there. If I didn't own MET already, that would be a valid entry point and I could buy some shares of MET. And if I did buy some shares of MET that day, then I would have put my stop 1% below the moving average, which would have been $89.83. So I'm going to move these stops up to that level. Now, there's lots of different ways you can do this. If I click on the X, it'll close out this position or, close these open stop orders. All right. So I'm going to do that on this one. All right. And then someone jot down here or help me remember 89.83. That's going to be our new stop because we have a new buy signal, 89.83. So I'm going to go back to my monitor tab. Now you'll see I don't have a stop order on MET, and I'm just going to right click, create a closing order with a stop, and then I just put 89.83 in here, right? And then I want that stop order to be good till canceled. No guaranteed to get filled at 89.83, could get gap lower. But we're going to send that off. And now if I go back to my chart, I have a stop at 89.83. Coincidentally, this is kind of a fun place to be, is our purchase price is at 84. So by adjusting this stop up, we've actually, and I don't like to use the term locked in because a stop order doesn't lock in anything, right? But our stop is above our net cost here, our average cost, because we bought this twice, right? Our average price is 84.32, and our current stop order is at 89. So that's kind of a fun place to be for a lot of traders and investors, that their original stop or their current stop is above that original purchase price. And barring a gap down, if it just trades through that, even if we get stopped out, we're going to have a little bit of a profit on this position. Okay. So that's kind of cool. Now, the other one was Target, TGT. Target, you can see we again have, two different stop orders. We have 7 shares total of this. We bought some shares back here on the 7th of, is that the 7th, 4th, maybe 4th? Go to the monitor tab, we can see that maybe a little bit easier. If I click on the P&L open, I can see my purchase prices on March 5th and 7/30. And so again, our average price is about 130.27, and we need to determine where to put our stop. Well, this one's a little different here. We have, the MACD's been green a long time. So there's a couple ways we could do this. We could go back like we did there, and we could say, well, this green arrow gave us an entry point, but we didn't add to this position until just a week or two ago. And so we set our original or our stop on that new position there with 3 shares. So in this one, I think what I'll do is I'll move this stop up to match that recent stop we just did. And so if I put my cursor there, you can see the 130.52 is where my current stop is. And so let me show you kind of a cool way to do this one. So remember the 130.52, that's where our current stop is. I'm going to cancel this order, just click that X, and that one's gone now. And I'm going to adjust this one. So again, I can either go back to my monitor page, or I can just move it down a little bit here, which changes the price, but I want to edit this. And I'm going to edit this to add to total 7 shares because we had 4 others right before. And our stop was what? 130.52 when we added to that position a week ago. And it's still good till cancel. We hit confirm and send, and we review the order here, and we can see that, okay, great stop order, not guaranteed to get filled there. Send that order off. And now we have 1 stop order at the same place we put the stop on that more recent add to the position. And so if we go back to our monitor tab and I click on the target, I just have 1 stop order there and 1 stop order on MET. Okay. And so Trader Joe says, is that process the same if you sell partial position? In other words, you have to close out profit target and stop out target, sell position. But if you just click into a position and set a new stop. Well, I guess it just depends on how you do that, Trader Joe. I showed you a couple different ways that you could do it. If you were going to sell part of it, then of course you'd want to cancel whatever existing order was associated with that part that you're selling, and then on the remaining shares, you determine where to set that stop. All right. So that's a great question there to look at. All right. Now now probably maybe the more fun part is I wanted to show you this. Several weeks ago we talked about the sector indice public watch list. So what we're going to do now is we're going to take a look at the sectors and see if there's a way we can determine which sectors are the strongest. Now, Mike Fairborn has a great webcast on Fridays where he goes called Market and Sector Analysis, where every week, he goes through some different ways to see what sectors are strongest. In our Trader Talks and Trading Futures class that we do every single morning, right at the market open, we're usually going through the different market indices and sectors. And so you've probably seen various ways to identify which sectors are strongest. I'm going to show you one that's kind of fun and show you a tool that I actually just learned about recently. I'm sure it's been around on Thinkorswim for ages. I just didn't know it until I watched one of Brent Moore's webcasts recently. But this watch list, what I'm looking at is the sector indices watch list. If you go up here to the public, it's right here, sector indices, and that's a public watch list that's available to you. Now, I actually recreated that list and I added what we call the SPX. That way, that SPX symbol is in addition to those 11 sector symbols. And so that's the watch list that I'm looking at. And if I click on this little gear right here, I can customize what I'm seeing. So like on that list, I only have the net change, the bid and ask price. Well, I want to see what what each of those sectors has done over the last like 6 months, 3 months, and 1 month. And so let me show you. Do you see this percent change since? If I click that and add it to my list, it allows me to choose some different time frames. 5 days, 20 days, 1 month, 6 months, and year to date. Now, there's another way you can script this as well, and I added a script that's in the description. It's at the top of the chat panel right now, but the 3 months change is there as well. That's the script that I added. So let me show you. If you add a few of these to your page, your columns, number one, you can't read any of it if it's over here in the gadget. So if you do a left click right there, you can detach your gadget. And if you detach the gadget, this is what will come up. Is you can see this sector watch list. This is that same watch list. And what I did is I added a few columns. So let me show you this so you guys can see this and take some notes here if you want. But I have a description because the stock symbol is like SPX 500 number 10. I don't know what that is. Okay, so I added the description so I can see, oh, that's energy, right? Or information technology. So I added the description. I did percent change. Now that's usually part of the normal watch list anyway. But then I added percent change since for 6 months, and then it didn't have a 3 month, right? If you look at that, it has like a 6 month and then it jumps down to 1 month. So I wanted to use a 3 month one as well. And so there's a script that I created for this one, and it's available to you there. Um, so you can put that in your own watch list. And then there's also the change 1 month. And so once you have all those loaded, if you click OK, then this is what your watch list page will look like. And you can do this with stocks, you can do this with really anything. But what I wanted to do is just show you this method of taking a look at the last 6 months. And if you click on that, you can sort by that column header. And what I want to do is I'm just going to take just a blank piece of paper here, and we're going to together identify which sectors are strongest over these, multiple periods. So let's take a look here. Over the 6 month period, looks like information technology is number one. So information technology, the S&P 500 index itself has outperformed just about everything. And then energy and financials. So if I go up here, so information technology, energy, and financials are the top sectors over the last 6 months. Then what I want to do is I want to take a look at the last 3 months. So I'm going to go over here to my 3 month column, click that, and it sorts low to high. And then I'm going to click it again and go high to low. So 14% in the last 3 months for what? Whoa, healthcare, financials, industrials, and energy. So we'll put those four in there: healthcare, financials, industrials, and energy. So 3 months, we have healthcare, financials, industrials, and energy. All right, and then let's take a look at the 1 month. So we pull up that same thing. Now we're going to sort by the 1 month column, and we have our 1 month, and we're just, again, going to grab those top four: energy, healthcare, financials, and IT. So we're starting to see, a little bit of repetition, right? For the 1 month, we had energy, healthcare. What was the other one? Financials. Let's double check that. I put some notes down, but I just want to double check. So we had energy, healthcare, financials, and IT. So IT, you'll notice materials and IT are really close, like 3.16%, 3.02. So when I did this morning, it was materials, but here at the close, IT's pulled up again. So here's the deal. Rather than just looking at one criteria, like a 3 month, what's strongest in the last 3 months, we're looking over a 6 month, 3 month, and 1 month. And which ones do we see that are repeating there every time? Well, energy's in every single one, financials in every single one, and healthcare and IT are in two of them. So, those are pretty strong too. If we wanted to do a search in those, we could. But let's focus on energy and financials that are showing up in each one of these over the 3 month period. So let's take a look now. what I did is I have um, my live demo account here because this is the only place we can actually run studies for our scans. And this scan, I shared it in the description. It's there in the description for you. Um, and when you load it up there, you can click on load scan query. And if you go over here to personal, it should be there. And it's just called Two Green Arrow Scan for Sectors. It's right there in the description of this webcast, and you can put it in there. Okay. And I see your question, Eva. Let me go through this scan a couple times, and then I'll see if I can address that question. All right, so we load that up there, and the default is it goes to the S&P 500, and we've been focusing on the 100, so I'm going to change that. You can certainly leave it as S&P 500, but I'm going to change these for our class today to S&P 100. And what this is looking for stocks between about 20 and $300. And just for our example today, I'm going to bump that up to 500 today, just because there's one that I wanted to look at that was like 330. All right. We're looking for stocks that have some volume, 500,000 shares or better every day. We're looking for something where the MACD and the stock price are kind of in a green arrow scenario, right? And so if I click scan, this is going to give me now for homework, because we're not going to be able to get through all of these today. For homework, what I want you to do is jot down these symbols and then go look at every single one of them on your charts and determine whether it has a buy signal based on the Two Green Arrow sample plan that we're using that you can trade in your paper money, or if it has some other, buy signal based on your own rules. But we have COP, CVX, and XOM here. And so I'm jotting these symbols down on a piece of paper because I want to show you the scan in those different sectors, right? We wanted to look at financials, and we wanted to look at what else was it? Well, let's go back to our paper. What was the other one? Energy and financials that were in all three of those months, right? So energy, we found COP and CVX and XOM. So jot those symbols down. And then if we change our scan in, go down to here to industry and go to financials and then select all financials. And let's do the scan again here. And there's actually quite a few that have come up in financials. So we have AXP, BAC, Bank of New York, JP Morgan, Met, which we already own, right? Schwab, and Wells Fargo. So what I want to do here is look at BAC, and I think it's Wells Fargo is the other one. No, JP Morgan. So again, for homework, you guys can look at all of these symbols, but I want to take these scan results that are very, very fast and go look at them on the chart. And let's place a couple trades here today before we finish up. Now, Eva brought up a good question, about just the sector rotation, which is what this is called, this type of analysis where, we've looked at the sector rotation in the S&P 500, and it is very broad. We've done a little bit of financial or fundamental analysis in these webcasts here. James Boyd on Wednesday morning, so like today, but earlier today, we have a class called Growth and Value Stocks where James will take a much deeper dive into fundamentals. You know, the question was, what do I say? Well, my personal thought is if the stock is up trending and it's in a strong sector, the odds, and this is subject to change, obviously, but the trend is up, and where it's in a sector that's in favor right now, those stocks tend to keep going up until they don't, right? And you can start to see that because the trend starts to change. Now, again, that's a very technical analysis side of it. Schwab recommends that you don't just do technical analysis. And so we're doing some sector analysis. If you create a watch list of stocks that you feel comfortable investing in, whatever that means for you, if you've done your homework and you've done your fundamental analysis, you've done your technical analysis, and now you have a watch list of stocks that you're willing to invest in, and that's what we're doing in a simple way by looking at the S&P 100 stocks. We're saying those stocks are strong companies. Those stocks are stocks that are attracting institutional investors because they're in the S&P 100. And I know that's a simplistic approach, but hopefully that answer helps you a little bit. All right, so let's take a look here in our last few minutes, and let's do a trade on one financial stock and um, one stock in the energy. So we'll do COP here in the energy group because I wanted to just see we're starting. We were downtrending. In fact, we actually owned this before and got stopped out over here at about 111, $112. And now we got to buy it again. You're saying at 127 and maybe even higher because we're right at resistance. Yeah, that's what I'm saying. You know, if you use stop orders, there are going to be times where you get stopped out and you know the next buying opportunity will probably most likely be above that price at which you got stopped out. And that's tough pill to swallow. Okay. Tough pill to swallow sometimes. Now, on COP, what I wanted to do here is because we recognize there's some resistance up there about let's call it 127.90 is where I got my line. And it's an area. I mean, you could probably argue that area is as low as 124. So we'll put another line right about there. So 124, 126-ish, somewhere in there. But what I want to do here is I want to do a buy stop. I want to buy this stock only if it breaks out. I don't want to get in if it hits its head here and falls back down. So we're going to set an order up there about 127 and change above the resistance. So let's call it 128.50. That's going to be 68 cents. So I'm going to put my cursor up here, right click, buy custom with a stop. And we're going to say 128.50 because that's just, a number above resistance there. And then our stop, if we put our cursor there, our stop is going to be below the moving average at 112.94. And that's how we do it. Pretty simple. We'll leave it good till canceled on both because we don't know when that's going to break out. And we can buy up to $500 worth. So what's that? Going to be 3 shares. Hit confirm and send, and that's 385. Maybe we can do 4. So 4 shares would be 514. And so you have to decide if that's close enough or 500 max. Well, that one's close enough for me. All right. So we're going to say, put that in our 2 green arrow box right there. A stop order not guaranteed to get filled at 112.94. And we're only going to buy this if it breaks resistance. So let's send that order off there. And that's going to be really the only order I can place today because I'm out of time here. But we did cover the things that I wanted to cover, which was to show you that really cool scan, gave you some homework of looking at those different stocks there that have, 2 green arrows based on the scan criteria. And then you can go through and decide whether you want to, purchase those stocks based on the 2 green arrow. If it's at resistance like COP was, look for a buy stop above that area. If it breaks resistance, we're saying, hey, if this breaks resistance anytime during the day, then I want to buy some shares of that stock. And then, activate my stop order, which is 1% below the moving average. And then there were several others that we had, CVX was one that came up. There's 2 green arrows today, kind of similar scenario. It has a little resistance over the top of its head. Exxon Mobil, little bit, that one may have broken some resistance yesterday, gave a green arrow, basically starting to trend back up again. And then the financials, we had JP Morgan, which has been trending nicely, making another new high for the last 6 months. And then another one that came up was WFC, Wells Fargo. We actually bought that one last week. It dipped down below our purchase price, and now it's trying to re-break that resistance that we had identified there. So hopefully that's helpful for you. Again, if you haven't subscribed to our YouTube channel, please do that. It really helps us out and gives you access to all the great content that we have. Again, follow Ben and me on x.com at Scott Thompson CS or at Ben Watson CS. And, appreciate you taking time to be here with me today. Hopefully that's helpful. Have a great day, everybody.